Do you feel overwhelmed by all the various investment possibilities? Be at ease, I'm here to help you. The top 10 assets everyone should invest in. Welcome to Investing Alpha. Here are the top 10 investments that you should make, especially if you are young. These 10 assets are crucial for creating a stable financial future, regardless of your level of experience. On this list, there is something for everyone, whether you're looking for long-term development or immediate rewards. Number 1. Index Fund Stocks. The finest financial choices you can make before reaching 40 are index funds. Despite the potentially very high risk, they offer some of the largest rewards. You have plenty of time to make and learn from mistakes when you begin your financial path, but you should always make wise, thoughtful decisions. Based on the S&P 500 index as a benchmark, stocks have an average return rate of 10%. Bonds may be a good addition when you assemble an index fund strategy. Bonds are the safest investment, even if they offer the lowest return rate. The fact that index funds charge less in fees is a huge benefit. The rewards increase as the fees decrease. Number 2. Real estate. One of the best investments is real estate for a variety of reasons. First off, there is typically a housing shortage and real estate assets nearly always increase in value. Buying your own house is the first step because rent and other costs are decreased when you own a home. After winning your own home, you can consider developing other commercial properties. However, there are a number of crowdfunding platforms where you can invest as little as $500 if you are unable to engage directly in the real estate market. The invested funds would then be pooled with the contributions of other investors to form real estate investment trusts, which invest in real estate properties. Number 3. Education. Your 20s and early 30s are the best years for learning, according to study. Consequently, this might be the ideal moment to earn that additional degree. Education is crucial because it may position you for success in the workplace. However, you must recognize that not every knowledge or learning constitutes an asset. As you proceed, exercise caution as some learning may be considered a pastime and may not be monetizable. Start by looking for successful employment in your preferred fields if you wish to invest in your education. Number 4. Startup business. Another investment you should make in your 20s is a startup business. Even if it isn't the next Amazon, investing in a business while young can bring some incredible returns. You don't necessarily have to start the business yourself. You can invest in other people's businesses in exchange for equity in their business. For example, you could be an angel investor, and this is a great option if you know the founder. Your investment can be in the form of a convertible note, which means it could turn into a loan if a specific criterion is met. The other way is through crowdfunding. There are multiple crowdfunding sites with incredible startups that have high potential. Select businesses with compelling narratives and founders who have some business-related skills, experience, or education. Another option is to collaborate with a venture capital fund. You can start as an accredited investor and work your way up to venture capital. Number 5. Treasury bills. For every investor, regardless of age, Treasury bills are an essential asset. Short-term government-guaranteed debt instruments called Treasury bills are used to fund spending and manage the money supply. There are 3 tenors for Treasury bills: 90 days, 182 days, and 364 days. Everyone has expenses to cover, including rent, tuition, and even professional exams. With the funds you already have on hand, you can easily purchase Treasury bills and cash them out when they come due. This is an example of the financial concept known as asset and liability matching, which entails buying an asset to help pay for future liability. Treasury notes are completely risk-free, so unlike other investment options, your profits are assured. Number 6. Growth stocks and dividend stocks. A great way to invest some of your money in a high-risk, high-reward endeavor is through stock investing. Growth stocks are securities with projected annual growth rates that are substantially higher than the industry average, while dividend stocks are often stocks of businesses that are financially solid and mature, meaning the share prices are less volatile than growth stocks. These firms produce more sustainable positive cash flows and revenues than their peers. You should start including dividend equities in your portfolio as soon as possible. If the businesses continue to perform effectively, they offer chances to make a stable income over an extended period of time. Number 7. Exchange-traded funds. ETFs and index funds resemble one another quite a bit. ETFs resemble index funds since they are collections of securities that include different types of assets, such as stocks, bonds, and gold. They trade similarly to stocks, allowing shareholders to purchase and exchange shares on a market. Because of their versatility, they are useful tools for investing in both broad market indices like the S&P 500, as well as in the industries like technology or health, and even in sub-industries like social media or robotics. Number 8. Commodities. A commodity is a term used in economics to refer to an economic good, typically a resource, that is fully or substantially flexible, meaning that the market recognizes instances of the product as identical or nearly equivalent regardless of who generated them. Investing in these can be done in a variety of ways. The initial step is to buy various quantities of actual raw materials. Additionally, investors can make investments via futures contracts or exchange-traded products or ETPs that closely track a particular commodity index. These complex and extremely volatile investments are often only advised for experienced investors. Mutual funds that invest in companies that deal with commodities are another option to get exposure to the market. Commodity investing has benefits such as portfolio diversification, possible returns, and protection against inflation. Number 9. Annuities. An annuity is a contract between you and an insurance company that guarantees your regular payments now or in the future. A single payment or numerous premium payments can be used to buy an annuity, while some agreements provide a means of retirement savings. Others might also use your investments to create a source of retirement income. You have a deferred annuity if you use an annuity as a savings vehicle and the insurance company delays your payout in the future. Conversely, if you use the annuity to set up a means of retirement funds and your payments begin right away, you have an instant annuity. Since annuities are frequently items that investors consider when they plan for retirement, it is important to understand them. Additionally, they are frequently promoted as tax-deferred savings products. Annuities do, however, come with a variety of costs and fees, including administrative, mortality, and expense risk fees. Additionally, commissions on annuities can be very costly, up to 7%. Number 10. Cryptocurrencies and initial coin offerings. Just lately, cryptocurrency and initial coin offerings, or ICOs, piqued the curiosity of traditional Main Street investors. Still, with millions of dollars brought up in ICO financings and more than 1,000 different cryptocurrencies now accessible, these rapidly evolving markets are appealing to investors. It is also challenging for the majority of investors to make rational sense of these complex investment products and determine their risk levels. The potential returns could vary from 12% to 200%. ICOs have sometimes done incredibly well. In this case, the OTA had 13,000 times return on investment. In other words, if you had invested $1 when it was given, you would have made $13,000. That's it for our list of the top 10 assets that you should make if you are in your 20s or 30s. Don't forget to hit the subscribe button and switch on notifications if you like this video and want to see more. Thanks for watching, and we'll see you in the next video.